Welcome to another episode of Equity Mates, Tuesday here in the AusBiz studios. Off the back of a big day on markets yesterday, and Ren, I'm going to introduce you in a second, but we're here to talk stock. We're here to keep talking stocks. My name is Bryce, and as I've said, this is my equity buddy Ren. How are you going?
Jeez, tight intro as always. At least you weren't getting caught out by the credits ending like last week, so we'll give that a tick, but we might need to tighten that intro up a bit. Look, yesterday was all about Afterpay. The conversation continues today, but we're not going to be talking about Afterpay here because there's plenty of companies reporting their results at the moment, and we're going to, in today's episode, talk about a few that have caught our eye.
That's right, Ren. Last week we started off the reporting season. This week we're going to be talking all things big tech. No surprises there that they keep making headlines. Rio Tinto is also pumping out the cash, and then closing out with a bit around Facebook and the metaverse.
Circling back to big tech.
Circling back to big tech, yeah.
Look, I mean, we do laugh at the fact that every reporting season we talk about big tech, but
every single reporting season.
Honestly, like, they are just fascinating stories, and they are fascinating stories because of their growth. And so I think let's start there. Alphabet, Apple and Microsoft together delivered over $50 billion in profit in one quarter.
And that's not even including Amazon.
That is not including Amazon. Amazon actually had a weak report. Well, they've got a weak forecast. Yeah.
They still pumped out at what, 113 billion in
True. Weak is a relative term.
Absolutely, it was amazing and incredible. But yes, Ren, 57 billion in profit, USD, in a quarter.
So let's take those three together and just talk about them quickly, because a lot of ink has been spilled writing about these companies.
Yep.
So Apple, Alphabet, Microsoft together, we said 57 billion in profit and 190 billion in revenue. US. So in Aussie dollars, that's $250 billion in revenue in a quarter. Like, it is just an ungodly amount of money.
Stupid. It's ridiculous.
So let's start with Apple, the biggest of the three. I think the story about Apple is all about better than expected iPhone sales.
Yep, 50% growth for them, I think.
Yeah, from a year
earlier.
So I think the iPhone story is a 5G story. The iPhone 12s have done incredibly well. A lot of people are pointing to the fact that it can access 5G. It'll be interesting to see if that carries on with iPhone 13. I wonder if they're going to do that thing that some hotels do where they don't have floor 13. But I think the Apple story is also a China story. So in this quarter, Apple set records for iPhone, Mac, wearables, home and accessories, and their services business in China.
Yeah.
That's
pretty
not
phenomenal.
bad.
That's not bad, yeah. Huge growth coming from China, sales up 58%. And as expected, as we've spoken about many times on the show, the services continue to grow, up nearly 33% to 17.5 billion in revenue. They now have 700 million subscribers.
It's unbelievable.
It is unbelievable. Yeah. But look, they are still facing that antitrust over in the States around the control that they have over the App Store. So those issues always seem to be facing big tech. Doesn't really seem to be having an impact at the moment.
Yeah. I think Apple we're talking about, Alphabet we'll talk about next, Facebook we'll talk about towards the end of this episode. Regulatory concern has, I guess, never been more real. Can't say the same for Microsoft. They literally did get sued. But yeah, it'll be an interesting to see what happens over the next few years with the Biden administration, but also with the EU. I think it's really important to watch what's happening over in Europe.
Yeah. So that's Apple, better than expected. Alphabet, ad spending continues to be very strong across the board.
Well, yeah, it was weak this time last year, but it's rebounded.
Back and roaring. So revenue of 51 billion, search delivering 35.8 billion of that, YouTube delivering 7 billion, and cloud delivering 4.6. I think the fascinating part of the YouTube is that it's close to the revenue that Netflix delivered.
Oh, really?
Yeah.
Wow.
So it in itself is now becoming quite a significant, I would say, competitor
Yeah.
to these streaming services.
Well, people have written analysis of what YouTube would be worth if it was a standalone business on the share market, and it's
Meaningful.
big in itself.
Yeah. Yeah.
Multiple hundreds of billions of dollars.
It's crazy.
Yeah. So yeah, as we said, digital ads slowed down last year. They've rebounded incredibly strongly. Google's search ad business is just a powerhouse. 96% market share. Yeah.
Antitrust.
But Google are also focusing on e-commerce, deepen their relationship with Shopify, and YouTube has just acquired this Indian business, SimSim, that is focused on video commerce. So I think one thing that you're hearing in this earnings season, there's a lot of chat about video commerce, like TikTok, obviously, YouTube, Facebook and Instagram are prioritizing video. I don't know if I've ever bought anything.
Well, to take a quick step back, video commerce being selling through video, essentially, using creators or influencers or whatever to then sell product. Yeah. Well, let's put a pin in that because there's definitely a lot going on in Silicon Valley around that at the moment.
Sure.
So we'll pick it up next week.
Okay, and then the final of the big three tech companies, Microsoft. I think the Microsoft story over the last few years is one of just beating expectations.
Yeah, always beating.
Whatever you think about it, we'll beat it.
Yeah. For the last, 3.5 years or so, they've beat expectation quarter after quarter after quarter.
Yeah.
Revenue, $46.2 billion, up 21%. Azure sales, 51%. Up.
Which people were a little bit concerned about. They thought it was a little bit too slow.
Jeez.
I know.
Too slow. 51% growth in a quarter.
No, seriously. The reporting was Azure looks like a bit of a worry.
Oh my gosh. And they've hit the $2 trillion mark.
Yeah.
So these companies on the race to the three.
Yeah.
Yeah.
And I think so in the cloud computing business, AWS is number one, Azure is number two, Google is investing heavily in theirs. And so it'll be interesting to see, because there's just been some unbelievable growth rates coming out of AWS and Azure in the last few years. So it'll be interesting to watch if that continues. But I think that's enough about big tech, because there was another ungodly number that came out of the markets last week, a little bit closer to home, and that was Rio Tinto's dividend.
Stunning. If you're a shareholder, stunning. Rio Tinto, a mining giant here in Australia, is incredibly benefiting incredibly from the record iron ore prices that we're seeing, returning $9.1 billion to shareholders after its most profitable and lucrative period in history.
Yeah, the most lucrative 6 months in its history.
6 months in its history. And when we say what that, it's great news for shareholders, we're talking a US $5.61 a share in profit for the half.
Yeah, dividend.
Yeah,
for the half.
Which is just, if you think about how many shares Andrew Forrest owns, who is the...
No. Twiggy is Fortescue.
Sorry, I'm thinking Fortescue, damn it.
He might own some shares.
He might own Rio, damn it, but still.
So just to put this number in context, because share price is in the hundreds, 130 or something. $5.61. What does that mean? It is more than double the previous record for a Rio half-year dividend. The record in 2019 was set at $2.12, so it's more than double that. The record for a full year of shareholder returns was $5.57 in 2020. So half year and full year dividend added together, $5.57. This year's dividend is more than that. This half year's dividend is more than that by itself. So as a Rio shareholder, you're pretty happy. The $9.1 billion US dollar dividend was a record in corporate Australia, most ever.
Jeez.
Guess who held the record before that?
A mining company.
Rio, the year before.
Jeez. Well, that's coming off the back of underlying earnings of $12.16 billion for the first 6 months. So absolutely churning that out. And as we said, that is largely driven by the record iron ore prices that not surprisingly, but they're still just hovering around these incredible marks.
Yeah.
So
Well, here's the number that just blows you away. Analysts have looked at the iron ore price and Rio's cost to produce in WA, and they think that they're making more than $100 of profit after tax for each ton they ship.
wow.
Yeah.
Wow.
That's margin.
That is margin. Wonder what Fortescue's making.
But the interesting thing is that part of, like, Rio has struggled with iron ore. Part of the reason why the iron ore price is so high is that Rio and then Brazil's Vale have both struggled to actually ship enough ore. And that supply constraint, coupled with an increase in China's demand to record levels, has really been a key driver of the price.
Yeah, there you go. What have they been battling with?
A number of things. They've had to slow down to better look after like cultural.
Sites.
Because of cultural sites. I think they've had labour issues. COVID's obviously been a factor. But to put numbers on it, they shipped in the 6 months 154.1 million tonnes, which was the weakest start to a year since 2015.
Wow.
Yeah. Million tonnes of iron ore, I should say.
Wow.
Yeah. But that is just one challenge they're facing. There's a number of others, and we put a list together because they might be returning $9.1 billion to shareholders. But I don't know if you'd want to be the Rio CEO right now. Well, actually, I say that. You would.
Yeah, you'd take it.
But here's a list of all of the challenges that that's been spoken about just recently in the media. Just get a sense of how global this business is as well. Criticisms over its handling of Indigenous cultural heritage sites in Australia, higher taxes on copper projects in Chile and Peru, cost blowouts and government tensions in Mongolia, challenging relationships with traditional owners in the US state of Arizona. The mineral sands business has been hit by civil unrest in South Africa. Aluminium business has been hit by striking workers in Canada. There's community opposition to new lithium and borate mines in Serbia, and they struggle. And the Australian-owned aluminium smelters are struggling to survive.
Just a few challenges to overcome there.
Did we cover every continent there?
Yeah, there's a fair few in there. Geez, well, a lot to work through there for Rio, but as a shareholder, you would be pretty happy with that dividend.
Oh, you'd be stoked.
You'd be stoked. So let's move on, Ren, to close out. We are going to circle back to tech and talk about Facebook, who delivered pretty strong quarterly sales, up 56% to 29.1 billion. Monthly active users up 2.9 billion.
Were 2.9 billion.
Were 2.9 billion, up 7%, which is pretty weak. In terms of growth.
Yeah. Slowest growth in 3 years.
Yeah.
But you know what? I forgive him. 2.9 billion is more than a third of the world.
Yeah, it's pretty incredible.
Yeah.
Yeah.
How much,
really incredible.
At this point, you're like, we need to roll out more internet-enabled devices and internet.
Yeah. We're at full saturation right now.
Pretty close, yeah.
And net income profit more than doubled to $10 billion. But that's not the interesting part, right?
No. The interesting part was Zuckerberg and the metaverse.
Yeah.
Now, I think it's important to frame this conversation in what I think is probably the finest moment of Zuckerberg's career, which is Facebook started on desktop. It was browser-based for desktop. And Zuckerberg realized early the impact that the iPhone would have and what smartphones would have. And he reorientated his whole business around phone. And that was an incredibly good move for him. But at the time, it was a big risk, a big gamble to sort of internally disrupt himself because he could see change coming. I say that because it sounds like he's trying to internally disrupt Facebook again, but I can't really conceptualize where he's going.
Yeah, neither. And this is with the metaverse.
The metaverse, yeah. Have you heard of the term?
I've heard of the term because I read our Thought Starters.
Dude, you keep talking about Roblox. Like, Roblox is on the forefront of this.
Yeah, in a way. I can conceptualize Roblox more than I can conceptualize how Zuckerberg talks about it.
Okay, so for people that aren't familiar with it, the metaverse was a term first used in a sci-fi novel in 1992 and it really refers to the convergence of physical, augmented, and virtual reality into a shared online space. Make sense?
Yeah, heaps of sense.
I think the best way to conceptualize it is right now, all of our interactions online are mediated through our phone.
Yeah.
Or through a computer. Like there's a screen in that we view the online world through.
There's still separation.
Just imagine no separation.
Yeah, but there's still going to be, I guess that's just going to come through either some crazy wearable, or is this going to be like the whole Elon Musk thing where...
I don't think it's chips in the brain. Right?
Yeah,
that's
chips
what
in
you're
the
going,
brain.
no,
But otherwise, there's still going to be something that's just replacing a computer screen that's...
Yeah, speaking of chips in the brain, this is completely off topic, but I'm pretty sure he raised like $200 million. Would love to see that pitch deck.
To do that?
Oh no, like recently, to continue it.
Oh, nice.
Yeah. But so Zuckerberg on his earnings call explained so he's been calling it the metaverse or like immersive internet.
Yeah.
And he explained it as instead of just viewing content, you are in it. I don't know if I want to be in my Facebook news feed.
Yeah. Or is it like when you're watching AFL highlights, you're
like
at the G?
At the G.
Yeah. But to me, isn't that just like virtual reality? Like, that's not too hard to conceptualize. It's just you probably need to be wearing some sort of glasses or something.
Well, I think, so there's virtual reality, and obviously Facebook owns Oculus, which is a VR company. Yeah. Then there's augmented reality, which people should think of like Pokemon Go or Snapchat filters, all that stuff.
Yeah.
And then there's reality, which is
everyone knows.
But I think the really interesting thing, and importantly for Facebook shareholders, is this is the direction that Facebook sees the world going, and they're internally disrupting themselves to focus on that. And all of the efforts that Zuckerberg have been talking about in terms of how do you build stronger communities, how do you better help with like e-commerce and help small business, all of that stuff. There are people in all of those teams that are like focusing on the metaverse.
Yeah.
And so right now, the Facebook is the big three platforms: Facebook, WhatsApp, Instagram. I don't know how much they internally disrupt themselves, but Zuckerberg wants to be first into this metaverse thing, and he wants to get there fast.
And this is how these big tech companies just keep growing.
Or he's wrong.
Well, it'll be interesting to see how this all plays out, Ren. But that does bring us to the end of another episode here at AusBiz. If you'd like more info on what we're doing, head to equitymates.com. For more information on all of our podcasts as well. They're going to be in your podcast app, so subscribe now. Hit us up with an email, contact@equitymates.com if you'd like to ask a question, and subscribe to all our emails. There's plenty going on at Equity Mates around.
Plenty going on. Your intro may not have been tight, but you've got the outro down pat.
Nice.
And look, if you want to hear Bryce get his intro that little bit better tomorrow, join us same time, same place. We'll be speaking to Elise Kennedy from Jarden, and she'll be sharing 3 stocks on her watch list.